2021. He worked at CFPB in its early days, serving as assistant director and student loan ombudsman shortly after the agency opens its doors. He's also been an FTC commissioner. Director Chopra, welcome.
Thank you. Chairman Brown, Ranking Member Scott, and members of the committee, thank you for inviting me to this hearing regarding the CFPB's semi-annual report to Congress. This is my 27th time testifying before Congress as an executive branch official and my 10th time before the Senate Banking Committee. And off camera, in my meetings with each of you on both sides of the aisle, I continue to find more and more areas of agreement on how we need to tackle concerns Americans are facing. Let me touch on a few of these. First is credit card debt. Americans owe roughly $1.2 trillion in credit card debt, and in 2022 alone, paid $130 billion in interest and fees. The CFPB's research has revealed that the credit card market is quite concentrated, with a few big players dominating the market. These large behemoths have been able to push up interest rate margins considerably, even when adjusting for broader market interest rate changes. And this increase in margin and lack of competition means that Americans are paying an extra $25 billion a year compared to 10 years ago. Many borrowers are paying over 30%, squeezing their monthly budgets, and small credit unions and community banks offering lower rates find it tougher to compete against the big guys. Further consolidation amongst the biggest players, including one pending mega merger, threatens to jack up rates even further. The CFPB is taking action to crack down on credit card companies exploiting regulatory loopholes, to make it easier to switch to a new card, to ensure consumers can obtain and actually redeem their promised rewards, and more. But many in Congress are rightfully concerned that the markets will not correct on its own. And there is growing bipartisan support for taking action. And in particular, there are proposals to limit annual percentage rates on credit cards on both sides of the aisle. And the incoming administration has expressed support for an interest rate cap. It will be important for this committee to ensure that credit cards are a source of credit priced at competitive rates rather than what we see in today's market. Second is digital surveillance and data privacy at home, at work, and everywhere Americans go. We are exposed every day to stalkers, scammers, and spies due to unchecked digital surveillance across the economy. There is growing bipartisan consensus that we need to do something about all of this intrusive surveillance, and it's critical that this work moves forward. The CFPB recently proposed a rule on data brokers that would curb access to sensitive financial data by foreign adversaries and others seeking to exploit Americans by spying on their personal information. Third, account closures and debanking. America's banking and payment system serves as essential infrastructure for our economy and society, and an account for a family with a bank, credit union, or digital wallet provider is a necessity. But unfortunately, we have seen too many account closures on questionable grounds. Over the last few years, the CFPB has been working to make sure that banks and big tech firms are not inappropriately denying households with access to banking and payments. We're especially concerned when funds are frozen or when accounts are closed for reasons not contemplated by federal law. We are currently engaged in litigation against big Wall Street special interests to defend the agency's authority to investigate when companies unfairly debank customers based on characteristics like religious affiliation. In addition, we finalized a rule to more closely examine digital payment apps to ensure they're following the law. The CFPB has also proposed a rule that would help to reduce account closures driven by overdraft churning. And we've proposed rules to update Fair Credit Reporting Act regulations to to make sure that identity verification algorithms are not leading to improper account closures. We're scrutinizing reputation-based algorithms and artificial intelligence so they are not weaponized in ways that block people from banking. We will continue to defend consumers' rights and to hold companies accountable, and it will be critical for Congress to support that work. Thank you so much, and I look forward to your questions.
Thank you, Director. We'll begin the questioning with Senator Smith of Minnesota.